It's official, and this video is my announcement that I'm quitting the options wheel strategy.
What?
Let me explain. In my videos where I describe the wheel strategy, I always start with discussing how I started off by selling a cash secured put. Well, it's the beginning of a new trading day and things are going to change here at Simple Option Trading. So before today, when I talked about an option wheel strategy, I would always kick it off with selling a cash secured put. Then if I got the shares assigned to me, I would turn around and use those shares to sell a covered call. And that's typically because I have cash in my pocket, but no shares available. So it made sense to me to kick things off by using my cash to sell a cash secured put. Well, no more. It's okay to start a wheel strategy by selling a covered call, even though I don't own shares. And in this video, I'm going to show you how I did it. One of the prerequisites for selling a covered call option contract is that I need to own 100 shares of a stock. So I'll be purchasing 100 shares of stock to use as collateral so that I can sell a covered call. But first I need to find a good stock to acquire. So a company with good fundamentals whose stock chart shows promise of future potential and growth. Plus the shares will need to be priced right, ideally near or rebounding from a support level and poised to move higher. Now after I identify the stock, then I'll either place a market order or a limit order as a way to acquire the shares. Do you want to know how I pick my stocks? Then be sure to watch the stock picking videos that I've published on my channel. I describe and walk you through my process for picking stocks that I use for option trading. After some research, I decided to purchase shares of a company called Riot Blockchain Incorporated, stock symbol RIOT. Now I placed a limit order and I was able to acquire the 100 shares that I needed, and my cost basis was $28.38 per share. I opened up my account history so you can take a look at the actual transaction where I purchased 100 shares of stock symbol RIOT. So I placed my limit order on October 18th, and it was filled that morning at 6:51 a.m. Pacific time. So when my order got filled, I purchased 100 shares at a cost of $28.38 per share. And so my total cost basis for these 100 shares is $2,838.17. Once I acquired the shares, I was immediately able to turn around and sell a covered call. Using the shares I just acquired, I sold a covered call. So from my account history, you can see the transaction where I sold the covered call for symbol RIOT. And I used a $29 strike price and an expiration date of October 22nd. So this made the length of this option contract 4 days. Now I submitted this order on October the 18th, and it was filled later that morning at 6:52 a.m. Pacific time, so 1 minute after I purchased the shares. Now at the time I sold this option contract, I was paid $1.25 per share, and when this option contract got filled, I received a premium payment of $126 that was paid immediately into my trading account. Here's a simple worksheet that shows my analysis for selling the covered call for the stock symbol RIOT. So at the time of this recording, Riot was currently trading at $29.80 per share, which makes the current value of 100 shares $2,980. Now because I picked the October 22nd expiration date, that made the length of this option contract 4 days. And with the $29 strike price, I showed you how I received $1.26 per share as my premium payment. Now recall from step 1 where I paid $28.38 per share, and my total cost basis was $2,838.17. Now if my option contract gets exercised and my shares get assigned, I'll receive the $29 per share, which means my profit from price appreciation will be $61.83. And that represents a 2.18% profit based on the amount of money I used to actually acquire the shares in the first place. I also profited from the premium payment that I received, which was $126, and that represents a gain of 4.44% based upon the amount of money I used to acquire my shares. And that money is mine to keep forever, no matter what happens with this option contract. But if this option contract does get exercised and my shares do get assigned, let's take a look at the total potential profit I can receive. I'll put in my pocket $187.83, and that's based off the amount from the price appreciation plus the premium payment that I received. And that total represents a 6.62% gain from a 4-day option contract if it gets exercised, which is not bad for a weekly option contract. But even if the option contract doesn't get exercised and it expires worthless, I'll still pocket the money I received from the premium. And that $126 premium payment that I received means that I'm earning $31.50 per day, no matter what happens with this option contract. So just think about that for a minute. What if I'm able to do this transaction every week? Well, then the profit I receive from just the premium payment alone would be $31.50 per day. For 30 days, I'd be able to earn $945 per month just in premium payments for transactions just like this one. And then if the option actually gets exercised, well, then I'll be able to collect some additional profit from the price appreciation of the stock itself. But in the other case where the option just expires worthless, what am I going to do? Well, I'll just end up selling another covered call using those same shares and then collecting another premium payment. So these numbers actually look pretty good to me. Being able to earn just over 2% for a 4-day transaction from price appreciation, plus an additional almost 4.5% just from the premium payment alone. So in a best case scenario, I'm earning over 6.5% in just 4 days. So now hopefully you can see and understand why I'm changing my philosophy about how to start an option wheel strategy. So even though I have cash in my pocket, it doesn't mean I always have to start by selling a cash secure put. Buying some shares and then immediately turning around and using those shares to sell a covered call, I think it's a perfectly reasonable approach for starting a wheel strategy. One of the reasons why this trade is working out so well for me and looks like will be profitable is because I was able to pick a good stock to start with. So just as a quick refresher, in order to sell a covered call, you have to either own or control 100 shares of a stock. And so before acquiring those 100 shares, you want to pick a stock that has good fundamentals and technicals, because the desire is for that company to continue doing well so that the share price continues to grow higher and higher. If you don't have enough time to watch my videos about how to pick stocks, then consider joining my Patreon, where I share exclusive videos of my stock picks every week that I'm going to be using for profitable trades. I also include my research notes, stock analysis, and trading strategies for every stock I pick to watch for that week. And of course, all my videos posted on my Patreon are ad-free. There's one last thing before I end this video. Now, making profits and generating an income from option trading is a great thing, but keep in mind that all gains made from trading are considered income and are subject to applicable tax considerations. So every month, I save a portion of the profits that I earned in order to pay for my federal and state taxes. So please consult with your CPA, licensed financial advisor, and or tax preparer regarding the tax liabilities for your unique situation. If you're still watching this video, I just want to say thank you so much. I really appreciate it. And I also want to wish you good luck and lots of success with all of your trades.